and you can tell that this guy or this girl wants to just code, or wants to just design, or wants to just write. They do the entrepreneur job because it is a manifestation of what they love to do, right? And there is again upside and downside. Upside is that no matter what the market condition, they will keep doing it because that's what they like and that's what they know how to do. Downside is that despite the market condition, that is the only thing that they do because that's what they like. And
yeah.
Hi Prashanth, good to see you again. Long week as usual. If you haven't noticed, the podcast has actually gone live, and we're getting some good responses. Although there was one brickbat pointed towards you. A good friend from Bioeconomy reached out, said you guys talked about account abstraction and didn't give Bioeconomy a shout out. So
yeah. I think we missed out on that. It's also a portfolio company, so double apologies. Okay, just to even things out, we should just invite someone from Bioeconomy to talk about account abstraction, because that's an important topic anyways.
Yeah, Aniket's a married man now, so maybe in a couple of weeks we should be a little more sensitive of his time.
No, we'll just welcome him to the club. That's what I told him.
He's moved over to the dark side. Anyways, today we have some interesting things to talk about, but to kick things off, what's happening in the world of crypto, we'll quickly start with layoffs and layoffs galore. This is always at the onset of any bear cycle. We've been in the bear for quite a bit, but I feel like it's really now kind of hitting all of these organizations that we're looking at, and companies that had 10 years, 20 years runway are suddenly cutting down their workforce from anywhere from 5% to 40% of their workforces. So this is quite scary to look at. What do you make of it, Prash? And is this something that you foresaw coming, or are you as blindsided as the people who are being let go are feeling right now?
See, it's a natural progression of a cycle, right? So again, I started in Morgan Stanley in 2007 end, probably the worst time to ever start in banking. And my first 2 years was all about layoffs. I somehow survived all the landmines, but whenever a bear market hits and the earnings take a hit, or there's a potential of earnings getting hit, then you try to reduce cost. And one natural effect of that is layoffs. And we are seeing that happen, especially around the tech industry and startup industry, both in India, in crypto, and globally, right? It's just, I think, a natural progression. It's not yet reflected deeply in the unemployment rate percentages, which is what we track at a macro level. But we just need to see in next quarters how much this intensifies into the real sectors as well towards layoffs.
Right. Yeah, I mean, crypto, I think, is just the beginning of it. We are already seeing it in the other startups in, say, the big ones in India. They're already announcing job cuts. I think yesterday Goldman Sachs in various branches in India were cutting jobs as well. So, I mean, the only thing that we can say is stay safe, and probably a great time to perhaps pursue entrepreneurial ambitions. If you got it. I know so many entrepreneurs who have actually started companies on the back of being laid off, and they've gone on to be super successful. But while that happens, are you following what's happening with the FTX Japan situation? I feel like not enough people are talking about it. But the story is that there has been very positive regulation that actually protects the retail investor. And in the case of insolvency, the way in which Japanese arms of crypto exchanges would work is that the liquidation first actually goes to the retail investors, the users, and then kind of the investors are essentially made whole. This is a big departure to how everything from a basic standard YC safe is written, where liquidation preferences are investors first, and then everybody else. there are two ways of looking at it. One is that, hey, this is now not how things are done. But the other is actually the common man who usually gets the rough end of the deal is actually being protected. And the investors should eat it up because they took the risk, which means that they also stand to gain the upside. But in the case of situations like this, the users come first. What do you make of this? And is this a benchmark for the way things should go?
Yeah, so I mean, whenever you say FTX, I always try to look at it in the rear view mirror because of how much of brain time it takes. But this is a very interesting development with FTX Japan, right? And whenever regulations are laid out, I think the primary motive of regulations are to protect retail customers' interests, and that seems to have been the case with FTX Japan, right? The way you have been elaborating on it. And I think it makes a lot of sense. Technically, any assets a customer has on an exchange is their asset, right? It's not the exchange's asset anyways. So having a first right on that, especially derived from their hard-earned money, to go back to them, I think makes a lot of sense. If you draw a parallel to the regular industries as well, even when, like, say, if there is a bank in India or UK or the US, right? The retail deposits are protected up to a certain extent by the central bank, right? Through and that is something that is provided irrespective of whether there is a run on the bank or not, right? So or if the bank is insolvent, etc. So again, they're trying to protect retail customers over there. So this I think is positive and something that hopefully can be mirrored into the other exchanges and also other of FTX's bankruptcy proceedings as well.
Yeah, let's see how that pans out, but definitely feels right.
Yeah.
We are also hearing about tokenized treasury bonds. Prash, this is your wheelhouse. Tell us what it is and why is it important?
Yeah, this is like life coming back full circle, So we have DeFi as technology where we do a lot of trading, lending, borrowing on chain. And what we have seen through the last 2 years is mostly digital assets or stable coins that get traded in DeFi. And you can lend your stable coin for like a particular interest rate, and that was typically being used by traders and market makers, etc. on the other side, right? Now, DeFi as a technology, and I think I've elaborated on this in the predictions as well, right? DeFi as a technology has a very good use in traditional markets. And what Ondo Finance has done as a use case is that they have brought treasuries, US treasuries on chain. What that means is US treasury is effectively the debt of the US government, basically them borrowing from institutions and people for their runnings, right? And typically this happens in bonds and in traditional markets through brokers, dealers, and asset managers. So now, but it had no interaction with DeFi or stablecoins. So now what Ondo is doing is with asset managers in between and trustees, etc. They are replicating the risk profile of US treasuries on chain. So going forward, one can access US Treasury as an instrument in DeFi with say USDC, right? So it's basically real world assets being tokenized and brought on chain. And given how the interest rates have moved in the last year or so, the 2-year Treasury in the US is, I think, yielding around 4.5% right now, which is significant, right? A couple of years back, all of this was like close to 0%. And now it's 4.5%. Technically, you would say US Treasury rate is risk-free rate. So risk-free rate of 4.5% available on chain is very very interesting. And I think kudos to Ondo to enable this, because this is a highly regulated instrument as well. So to bring it on chain is quite commendable. Having said that, the not a flip side, but usually my thought process on real world assets and tokenizing these assets is that there is a great use case. However, there is a lot of switching costs involved as well for something like this to scale, right? So even bringing it on chain makes sense from technology standpoint. People can invest into it. However, these will be permission pools with KYC and AML. B, you will need to have stable coins to invest into these pools. And C, a lot of asset managers might think, why do I have to go on chain for this? Why can't I just do with the regular broker dealers at a similar price, right? So those are things that will need time to get solved. Plus also, of course, I'm sure we'll need more regulatory clarity on how this can be scaled. But it's tremendous. It's something I've been like keenly following, and this is a great use case that can be brought into, say, even countries like India, right? In India, the debt market and the government bond market is, I would say, lower liquidity than the West. Tokenizing it, bringing it on chain, and within maybe say permissioned or private networks might get a lot of retail investors and the youth excited to participate in such opportunities as well. So I think it's got great parallel. I was actually thinking someone like from Ondo or someone like Hamza from Polygon could be interesting to have a chat on this topic, because they also went ahead and did product with MAS in Project Guardian, right? So which was tokenizing currency swaps using Uni V2 fork. So I think that this is an interesting topic. But yeah, that's my take on this.
It's some proper heavy lifting that we will have to do when Hamza and the crew come in. You should meet Hamza, actually. He's quite a interesting guy. And on the back of his very public Twitter spat with Mike Dudas, we should like try to understand what is really happening and get them both and make them, help them make kiss and make up here. Anyways, other news from my end, one of the startups that we were working with pretty closely got accepted into A16Z's crypto accelerator. So
wonderful.
I was was really happy when that happened, because this was a startup that wasn't really getting purchased when they first came in, like probably didn't have the right team, right balance. You know the usual things that investors say when, they're not too sure about, about a founder. But somehow, with the work that they have put in, the hustle, the traction, revenue, a crypto company with revenue is quite rare. All of that put together, they've cracked something aspirational, and now at least access opens up to them in a big way. So
how much details can you share on this? Who it is, what it is, etc.
After the call, I'll tell you.
Okay.
We're very happy.
That's great, man. Congrats. That's wonderful.
Very happy with that happening. So kind of brings me to this question, right? Like, so what is a great founder? And what are the characteristics that you're looking for in a founder if you are looking to join them for a job, invest in them, partner with them? Somehow there is a feeling that, hey, this is a good founder. But I think articulating it kind of helps the entire ecosystem in a big way, because I see this next wave being very founder driven. And it probably always has been founder driven. It is just that it gets the founder and their story kind of gets backtracked with the whole industry, things that keep coming up. But I think founders kind of hit the fore a lot more right now. And maybe I was thinking we should talk about, what makes a great founder. So Prash, when somebody comes, with their pitch deck and you're meeting them for the first time, what are some telltale signs that you're looking for to reject the founder? And then maybe by law of elimination, we can arrive at things that we should look for, that the founder is good.
Yeah, man. I think that's a great topic, right? And especially from our standpoint as well, because we look at very early stages, it's mostly a founder market fit that we are looking for, because there's not a lot of traction that you can gauge anyways, right? And a big no for us, and even for me, right, personally, would be in our space to not have conviction in Web3, or have not spent enough time in Web3, right? Or cannot prove that they are committed to this ecosystem. And you can do this in multiple ways, right? You can gauge this through someone who, what have they been doing? How have they been tracking this ecosystem? How much time have they spent with other projects? Are they coming from some other relevant project? Have they built a personal portfolio? Do they know how the stack adds up, etc. I think that type of like knowledge sharing is quite helpful to understand whether or not someone has conviction. And this is not as true in Web2, which is why I'm emphasizing on this, because Web3, whenever, probably not now, but in the previous 18 months, when there is a hype cycle going on, it's very important to determine that who is in it for the tech, as they say, versus in it for the money, right? And that is a big and we have I've seen a lot of folks who come with like great pedigree as well, but they still look at Web3 as something that they can make a quick buck out of, right? And that is something one should definitely try and avoid. The second is again related to this, but an underappreciation of token as an instrument, right? And what I mean by this is anyone who is thinking of when token as opposed to why token very early on in their journey as an entrepreneur in Web3 is somewhere confused in terms of like what is it that is required to build a proper business. And I'm not saying people should not think of tokens or should not launch tokens, but it doesn't make sense for a founder to start thinking about it until and unless there is early product market fit. And it doesn't change whether it's Web 1, Web 2, Web 3 in terms of the basics of running a business and scaling from 0 to 1, right? And you can potentially in some cases use token to growth hack, but then it cannot be the be all end all as a lot of founders think about it in Web3. So I would say when you say clear no, I would say being more economic and token driven as opposed to business driven, it is a strict no to begin with.
Yeah, I think so. I used to write stories about founders, right? Like back almost 10, 11 years ago, and I because of the volume of stories that we wrote, we started to see some trends, right? So we used to start having code words for what kind of a entrepreneur it is, and kind of contrary to your belief, the way we structured them was that at the bottom we had the ego-driven founders. And when I say bottom, I'm not saying one is better than the other. It's just that you found more of them. So so they are at the bottom of the pyramid because the spread is much larger. The number one reason used to be I want to do something of my own, or I don't want to work for somebody else, right? So the upside to it is they're super high ownership guys, and the downside to it is that they are often broken down by the market reality that you always have somebody to serve. If not a boss, it's a customer, right? The second layer was money, because I think by the time I had started writing stories about founders, the first IPO from India had happened with Make My Trip, and then they're like, "Oh, you can actually make money out of this, and it's better than going to a full-time job." There were people who were super objective about what makes money. Right. I think pretty much that's probably what you were saying. The token perhaps adds a sense of convolution to it in Web3.
Yeah.
But the second layer was guys who are super objective about, okay, big market, opportunity here. I will build something of value here, capture this much, and I know what the exit is. Okay. So, so the upside is super focused about where the money is made. Downside is slight deviations here and there, market changes, their thesis is not right. It really kind of breaks them. Third category of people are the passionates, right? So, and you can tell that this guy or this girl wants to just code, or wants to just design, or wants to just write. They do the entrepreneur job because it is a manifestation of what they love to do, right? And there is again upside and downside. Upside is that no matter what the market condition, they will keep doing it because that's what they like and that's what they know how to do. Downside is that despite the market condition, that is the only thing that they do because that's what they like and that's what they don't. The last kind was somebody irritated by a problem, right? And that was the rarest kind of entrepreneur that we could find. They solely existed to solve the problem. And again, upside downside to it, right? The upside is that so long the size of the problem does not matter to them. They'll do it because they're interested in it. So most of the time from the outside, it'll look like they're wasting their time, but they're so fulfilled when that problem has been solved, right? That's the downside. The upside is obvious that in the case that problem happens to be big, the founder themselves are like quite become very well to do. And whoever partners with them do that. So in crypto, I see category 1 and 2 a lot more than category 3 and 4. The ego and the money people a lot more than 3 and 4, right? Like so, by that law of elimination, I guess we will not have any founders to invest in or back or work with, So yeah. So anyways, I guess two biggest category of founders that we find are money and ego people. I hope that it changes. It changes over time. So to flip that question around, what would you say are things? What are some examples of founders where, and you don't have to name them, obviously, you can if you want to. What are some founders when you looked at them, they really stood out to you? So what about them stood out to you? And maybe you can share a story, and I'll do the same as well.
Yeah, I'll probably not with names, because then I'm not it should not come across I'm favoring someone more than the other, but I can define a persona, right? I think that would be more helpful anyways. In my mind, I usually look at this, I try to look at this as a science than an art. A founder who has proven is a proven founder from the past, has scaled from 0 to 1, and has potentially gotten an exit, not an exit, probably doesn't matter as much, but has done the hard work and hustle, right? And knows what it means to be a founder, is always someone who I would assign a slightly higher probability of success, because they have been through the hustle, and that is a good profile. Now, of course, it's a no-brainer, and everyone is looking for that, right? Then when if you come to like a newer founder, right, then it's their deeper conviction in themselves in terms of trying to achieve the problem, the statement that they are going after, and proving it in some shape or form of how they will go about doing it, right, is the great overlap. And the way someone proves this at a founder market fit level at a pre-seed or seed stage, to me, is that if they have sufficient subject matter knowledge, either with themselves or within the co-founding team, then you know that they have seen and faced this problem in the past in a deep way, and they have been thinking about this solution for a while, or they know how to potentially go after this solution, right? And so that is like the second layer. I see a lot of people also coming up in Web3, wanting to solve certain problems which are maybe not even problems today, right? I want to create a decentralized Amazon, for instance, right? Sure, I mean, sounds very great, but it just means that you have a very deep misunderstanding of how this technology can be used, and at what stage it is today to even enable or not enable something like this use case, right? So which is why I think subject matter knowledge is a bit important. Outside of that, there are like certain standard things as well in my mind, usually, like how do you go about constructing your team, who is in it. Of course, as a VC, I always have to look at what the addressable market is that you are going after, and not in terms of how you're demonstrating it, but in terms of how I think you can go about accessing it, right? Now, if you say fintech market globally is like 10 trillion, whatever, right? I mean, it doesn't mean anything to me at that point. It's about how are you identifying this small bubble within this that you will be going after, and that will help you from going from 0 to 1, right? That is what I'm more interested in terms of the founder as well. So that is the next category. I'm just trying to come top down over here. And then, of course, there are many times where all of this add up, but then the timing piece of it is probably a bit off, right? And you may just be too early, or you may just be a bit too late, where you already are facing a lot of competition in that space, and that is more on our side that we try to educate them on. But it's also something that is relevant. And one thing which finally, all of this summarized, this comes from my banking background, and I like laying emphasis on this. The better you're able to construct your pitch deck in, like, say, 7 or 8 slides to demonstrate all of these, is a great barometer to gauge how you think as a person, right? And how you think as a person and how you can distill your thinking and be refined about it goes a long way in showing that you are able to remove a lot of noise out of the system and are like very laser focused in how you're thinking. So I think people trivialize pitch decks a lot, but when you really look at like certain decks and like 8 pages, it's very crisp. It says a lot about you, your character, and also the amount of discipline you're able to put yourself under.
Right. Yeah, I guess, I mean, I'm probably saying the corollary of some of the things that that you're saying, right? Like, I think some of the best pitch decks that I've seen have been built by not so deserving founders, right? Because anytime there's a method, right, it can be gamed. and people are super smart, and I've seen that happen a lot at this very early stage at which I look at startups, right? So
Yeah.
the one thing that I'm looking for is, because it's super early and we catch them early, we have the time to see them over a little longer. And the one thing that I look for at that time is consistency. Is this dude saying the same thing, and is he working towards the same goal again or to that? Dude,
Yeah.
because, oh God, what have I just done myself into a hole now? Anyway, uh, so it's just the reality, guys. But no, I'm the point I'm making is, you know, we used to make fun of Sandeep back in 2018 and 19 because he was saying the same thing, that Bitcoin 1, ETH 2, and a scaling layer on top of ETH will be top 3, and that will be Polygon. ETH is what you need to build, and you don't need to build another layer one over and over and over again. And I said, you've got to make him, like, why is he saying this so often? But that, to me, maybe a couple of years later, seems to be one of the most important founder traits that I've seen. One is that you found something non-obvious, or you found something that is that's something that has a lot of value in, and then willing it to reality by being consistent and and progressing against it is probably the greatest founder superpower that that I have seen, and maybe to a large extent the most valuable companies in the world. You look at those companies when they were super early. You'd just probably be like, who's going to use that, right? Like, or who needs that? Who asked for this? But just having that belief and confidence is, I feel, something. Confidence in your belief that this is something that is real and can work is something that I really look for at the super early stage. And I don't care what the deck looks like at that time, because now I've seen it being enough times. In fact, now it's an anti-signal. If I see a very well done deck, right, I'm like, okay.
At that stage, definitely. Yeah. So I mean,
what's the scheme?
Just to give some context here to people. So Raghu, operates at, like, if you have come up with an idea that you want to do something about, then Raghu operates at that level, right? So you have to go from there to at least bake on that idea and do some, like, say, either an alpha or like a POC, something to kind of get to a stage where you then can explain that idea to a lot more people and start generating traction on it. Once you do that is where probably I come in from my VC hat, right? It's still, like, I would say, early stage.
That's fair.
But we don't come in at like a stage where it's just an idea, right? We can, if nothing stops us, but we don't typically. That's not where we operate. So I think that context is important. We are both early stage, but you are super early.
That's true. So I guess progress to me is the number one thing. The second biggest thing that I really like in founders is being able to rally a core team together, right? One of my favorite investors, Vinod Khosla, he says that look at the first 3 people that they hire and how long they've stayed with them when you want to invest in these people. So you can judge a founder like how you can judge a man by the company that they keep. I really have to change my vocabulary, dude. This is bad. But you can judge a person by the by the company that they keep, you can similarly judge a founder by the first few people that they hire, because that shows a borrowed conviction from people who have decided to put their time and effort and the best years of their life into working with this founder. And secondly, it also shows capability that those players are going to attract other good players that they will need when they hire. So that co-founder, 2 co-founders, and the first 3 people who work with them, I think is very, very important. Which I see, and that capability of a founder to really rally very high achieving smart people at an early stage, I think is super important. I think at the stage at which you are looking at startups, some of these teams will be there. Is that something you give emphasis to?
Oh, definitely. See, I mean, even at like the early stage that we operate, how the team has come together is important to us, but by then they would have, some sort of like an MVP or slightly more, quantifiable metrics that we would typically be looking at. The reliance, the founder still is the most important guy over here, and the founding team as well, but just slightly ahead of the curve, slightly ahead in the curve.
Right. Next contentious question I'll ask you is: being humble as a founder overrated?
Oh man, being humble
Because
as a founder.
okay, I'll tell you my experience. Okay, I meet very humble founders, and I find them sometimes lacking in ambition. Sometimes the humility is fake. Okay, they are actually pretty, pretty thinking arrogantly. And then secondly, I look at very confident, cocky founders who walk the walk also, right? Now I'm turned off by overt displays of confidence, but I'm realizing that is a bias and probably something that's
Yep.
come from my childhood of what I have seen. And I started to, now I'm questioning myself that, is humility an anti-signal, or what? And if it's not, how do you know that it's real?
Yeah.
Is what I'm getting at. So what are your thoughts on it, right? Like, do
See, I
you
mean,
really think that?
yeah, see, for me, right, it's very difficult. Biases and prejudices arise all the time, right, at every stage of this process. I try my level best to not judge at all with my own biases, and let the work speak for itself. So, from that standpoint, whether he's humble or whether he or she is humble, he or she is cocky or arrogant, right? As long as they are able to demonstrate those things that I explained, that deep conviction, the very good understanding of the problem statement, and a real genuine hustle attitude, right? Then those are the traits that I'm looking for, and I try not to delve too much into the personal side of things. Now, where it becomes where I would obviously put my foot down is where it's not treading on a thin line of hustling, but where it becomes more on the side of potentially going illegal or like unethical, right? And that is where I kind of draw the line. But otherwise, it's mostly personality traits to me that I'm mostly okay with.
Yeah, I mean, I'm trying to unlearn that, right? And I've been guilty of not giving as much attention as I should have about a few founders that I thought were cocky. But over time, I'm like, okay, maybe that's not such a bad thing. Maybe they're being real and they're owning who they really are. And maybe that works for the business. Who am I to judge? I'm not building it, right? Like, so.
Yeah.
Yeah.
And see, I mean, these days also, like, the appearances you have to maintain are like it's very important, right? It puts a lot of pressure on people as well, in terms of wanting to be seen as how the society or the community wants to perceive you, right? And that is too much pressure as well, and something, I mean, I at least try not to get deeper into.
Sure. Makes sense. This discussion is becoming deeply personal, dude, at some point. But what is leadership to you? Because that's an important founder trait. I know what it
100%.
looks and feels like, but what is it?
Man, to me, it's like there is a storm. I'll be the first person in the line protecting everyone behind me. That has to be the founder trait. Whether it's good times, bad times, worst times, with product, marketing, legal, you have to be there to kind of take it on the chin. That's leadership to me.
So lead from the front, lead by example. If they do that, then got it. Okay, I think it's pretty much the same. Sam Bankman, who's a field marshal of the Indian Army, actually has a exceptional talk on what leadership is. It's a 1-hour-long conversation where he gives a very funny, borderline chauvinistic conversation about what it means to lead, but totally worth watching. I think he's been able to articulate it quite well. I'll probably put it.
Since you brought that point, right, and you should share that with me. I would love to go through it. And of course, if you're adding it in the notes, that's great. Leadership also should not mean that I have to necessarily yell or like show my supremacy to get job done. the calmer you are in getting it done with limited amount of energy is how you kind of sustain yourself over a longer period of time, and you get respect in the process, right? You can be a great, you can get work done, but the ideal leader is probably one who also gets respect in the process.
That's true. That's true. Also, leadership styles are different, man. So that's another thing that I'm starting to learn. That some people like a particular kind of leadership. Some people like the strong, quiet type, and maybe that goes into culture and all of those things. Maybe we should talk about that in a later podcast. So anyway, I'm at my last. I'm at my last point. Okay, and I have a Web2 example of for what a great founder is, but I think it definitely applies in Web3, especially in this market. So the founder of Bharat Matrimony told me this story where he had been laid off, and he decided, okay, you know what, I'm going to start this company which does matrimonial services but online. He obviously struggled to get funding, and I think one large Web2 VC fund gave him a term sheet. And on the day that he was signing it, they told him, "Hey, all this is fine. What will you do if I take this term sheet away now?" Okay, and he apparently looked dead in that investor's eye and said, "It'll be hard. I'll probably take a couple of more years to do it, but I'll do it." And he started to walk out of the room, and that's when they're like, no, wait,
You're joking.
Sign it. That to me, I think, is the ultimate founder trait at the level at which I am looking at it. This unwavering belief in what you're doing is right, and getting other people to believe in that, and again, kind of mix of all the other things that you have. And maybe the best word to showcase that is persistence, right? I think we tell our founders this at Builders Tribe almost all the time, that it is important to show up, especially on the bad days. And I think like that's that one thing, irrespective of all the other things in the book, is what is most important to me as a founder. That's what I'm looking for.
Yeah, and just to add to that, so even as a VC hat, right? I would say that founders who can go the farthest, sorry, not the farthest, founders looking at VC should not look to convince the VC to buy their idea. They should be convinced from within that they want to do this idea with or without the VC, right? And that is, I think, a very important trait as well, which is pretty much what that example also demonstrates.
Yeah. I mean, you are going to build a business, and you need to believe that and act accordingly. Anyways, this episode became a lot more heavier than I expected it to be, right? old memories and things like that. And it's a different type of episode that we try to do. Give us feedback. Do you like this preachy stuff? If you do like it, then maybe we should do a little more of it. There are very interesting topics to talk about here. And yeah, Prash, any words before we move on to the next podcast?
Not really. I think this was interesting. I might write something about it to also help like the founders out there in case they wanted a bit more pointed approaches from VCs in terms of what we are looking for, just to guide them. But I mean, ultimately it comes down to having that mindset and that persistence, I think, is the right word from their side, amongst all the other things that we explained here. So yeah, you do reach out if you have any more queries. Otherwise, we'll move on to the next one.
Awesome. Which is in 1 hour from now. Oh wait, actually it won't make a difference to people listening to it right now.